There is chatter on Wall Street that the current recession may come to an end by fourth quarter, which has some dealers and jewelry manufacturers in New York wondering, how is this possible? Locally, we remain in quite a slump as major retailers especially continue to drop their inventory levels to save costs. The real story unfolds in the numbers. Sales figures have a long way to reach just to get back to where they were in 2007. It would take an unprecedented amount of consumer spending to bring these figures up, and there is no sign of this happening anytime soon. Weekly chain store sales were basically flat through August 8th. ICSC reported that sales rose 0.4%. Mostly due to regional tax holidays and back-to-school spending. As we come closer to fourth quarter, most analysts believe retail numbers will improve, not because consumers will spend more, but because comparison figures will be easier given the nosedive beginning in September 2008. The diamond industry felt the recession early on, back in December 2007, when we all noticed U.S. consumers pulled back that Christmas season. Let's take a look at how the slump evolved at a few of the majors. Profits dived at Signet in 2007, but look what happened in 2008. Double-digit drops followed by net losses. First quarter this year recovered a bit. Signet sales remain in a holding pattern of single-digit declines. Sales at Zale for the past 2 quarters were basically down almost 20%. Their biggest issue, though, is that they must bring an end to 5 consecutive quarterly losses. Zale already announced a charge of $50 million for fiscal fourth quarter related to store closures. Birks Mayors reported a loss at the beginning of calendar year 2008. So far, they have not been able to return a profit, and add to this double-digit sales declines for 3 consecutive quarters. Blue Nile's profits have weathered the downturn well enough, and that in turn is helping sustain their share price, which is up a remarkable 18% from 1 year ago. Diamond sales on a yearly comparison and profits turned negative in third quarter 2008. International expansion has certainly been softening the high single-digit declines from the U.S. Tiffany is still very much profitable, even though the drop in earnings has been steep. Sales have really only been slammed for the 2 most recent quarters. International expansion plans continue to help this brand. They will report second quarter fiscal results shortly. Bulgari tripped into negative territory this calendar year. Now sales are holding in the negative 20%. Any fiscal fourth quarter slide is bound to be softened a bit by that 10% drop in sales for fourth quarter 2008. Richemont felt the pinch in its net earnings, but still was able to increase annual sales for fiscal 2009 slightly. A poor long-term outlook for luxury retail has its investors rather skittish. After a steady climb for 7 years, the company's share price bottomed out in March at 14 Swiss francs. Share price has come back some, but is still down 65% from 1 year ago. Luxury group LVMH held to a single-digit growth pattern before the retail collapse. Profits have been falling now for a year. Jewelry sales remain weak at this brand, but international expansion is helping overall sales. Unlike LVMH, PPR, the parent of Gucci, has seen overall sales drops by single digits for 4 consecutive quarters. The most recent earnings report reflected a tremendous drop from 1 year ago. Expansion into emerging markets is softening that blow from sales declines in traditional growth regions. Retailer Saks has had a rough time. They last reported a profit in first quarter 2008. Sales have also slid quite dramatically. 4 consecutive quarterly losses are an astounding shift from triple-digit profit increases in 2006. Behemoth retailer Macy's, which reported a 90% drop in profits today for second quarter, has in the past reported scattered losses. Nonetheless, they managed to pull through with net earnings of $280 million last year. But that first quarter loss of $88 million and only $7 million in profits for quarter 2 is dealing a major blow to first half. Macy's hasn't shown an increase in quarterly sales since 2007. JCPenney has not reported a loss during this recession, although profits have been on the slide since first quarter 2008. Of the big department store chains, they have specifically mentioned that consumer demand for jewelry has basically fallen off the proverbial cliff. Here is a look at how precious metals held up this week. For all the latest industry news, be sure to visit diamonds.net.